Everybody, morning. I got notified of a AWS outage. If you're subscribed to Telegram alerts from any of my services, they may not fire off properly, just so you know. And there won't be like a catch up either due to the AWS outage. So, sorry about being late. I was trying to make sure that everybody understands on my team. So if we get any questions, yeah. Anyway. Alrighty. Let's see. Are you in the green with your trading for 2025? Start a poll. And it's an anonymous poll. I can't see the answers. So, I mean, all I see is yes or no. And I don't see who votes. So you can feel free to vote. If you're not, just be honest. Be honest with yourself. Be honest with everybody. And if you're not doing good this year, you only got half of October. You got 10 weeks left. 10 weeks left to turn this ship around. I was like, holy, like last night I was watching the, I don't know what I was watching, but what was I watching? Let's see. I was watching Carnival Eats, then I went to the bedroom and I couldn't get, was it Cooking Channel, I guess, to play. So we turned on local NBC and they were wrapping up the football game and they were like, only 16 weeks to the Super Bowl. I was like, holy fudge, 16 weeks to the Super Bowl. That seems like really short. And I was like, well, there's only 10 weeks left this year because I just put out week 42 update for market roadmap and for crypto power plays. I was like, well, 10 weeks left and then 6 weeks to the Super Bowl. I was like, I guess that fits. If it fits, it ships, right? And just twisted my mind a little bit. The speed with which everything is moving. So we'll be on to 2026 before you know it. 2026. So welcome, everybody. Welcome to the show. And AWS outage this morning. The power was out here at my office like 3 times this weekend. It was another thing. Like I didn't have any of the show stuff up. Like power been out. If I'm out of focus, it's because the camera's was all stupid too. And I apologize. I'll try to get it all fixed here. So I know it seems like I'm late every morning getting started, but hey, it's just part of the game. Seems like everything goes wrong first thing in the morning. And underwater video, thanks for refreshing your channel member subscription. I appreciate it. My family appreciates it. It keeps the whole channel going. And back to the regularly scheduled program. This is a show where we look at the market and say, yeah, everything's normal. It's like that meme, right? The little dog with the house on fire. It's fine. Everything's fine. Everything's great. The financial news, it's a sea of calm, right? Fed's got everything under control. Stocks just took a little breather. 2% pullbacks are normal. 3% pullbacks, just based on a tweet. And those little tremors you feel in the banking sector, well, those are just growing pains. Nothing to see here. Move along. If you listen to the mainstream financial media like CNBC, CNN, whatever. But us, you and I, we know better, don't we? Hopefully I've taught you to know better. We're the ones peeking under the hood. While everybody else is looking at the paint job, that they got spackled over everything, you and I, we're looking inside. What's that noise? What's that rattle? What's that crack? And we've got a story unfolding here. It's a story that I like to call in the case of the credit crunch. Or maybe it's the crunchy credit. Imagine you're at a party. The music's loud. Everybody's dancing. The punch bowl, it's full. And that's the stock market right now. We are fueled by 123 global rate cuts this year alone. Think about that. Global central bank rate cuts, 123 of them have occurred this year alone. For every single rate cut, the global stock market cap magically elevates $170 billion for every one of these rate cuts. Think about that. That's a lot of money. It's a great party. It's really great party. So great, in fact, that people are starting to get reckless. And when people get reckless, it's usually the sign that things are about to get real. Really, really quick. We have gone, listen to this. We have gone from 470 leveraged ETF tickers at the beginning of the year, January 1st. There are now over 700. And they're set to be 5x leverage single stock ETFs hitting the market in the next few weeks. All the applications were put in for like 20 new ones for 5x leverage. I always talk about leverage being dangerous. I mean, that's like taking 5 shots of tequila for every one that your friend takes. What could possibly go wrong? But, hey, corner of the party, away from the dance floor, there's that cracking sound. That's our credit crunch, our crunchy credit. You see, while everybody's mesmerized by the flashing lights of the stock market, the green, the new all-time highs, the foundation of this thing, there's cracks. I keep talking about this too. Like I can see what's coming, right? I may not know the exact card that's going to fall and the exact day it's going to fall, but there's a problem brewing. Regional banks like Fifth Third and Regions Financial, suddenly they got some problems, looking a little green around the gills. They're seeing some of their loans go bad. Some people stop paying the bills. Investors are starting to get a little bit nervous. This is like seeing the host of a party call his lawyer during the party. That's a red sign. Like, are the cops going to show up? Are the cops on the way? And it's not just the little guys. Goldman Sachs, the vampire squid itself, is warning about the potential global credit crisis. They're looking at over $5 trillion in private lending. And they're kind of getting that same nervous twitch. $5 trillion in private lending. This isn't just a few bad loans. This is bigger than the GFC in 2008. This is a systemic issue, much bigger. The credit that greases the wheels of the entire economy globally starting to get a little crunchy here. But don't worry, Federal Reserve, U.S. Federal Reserve, it's on its way. Sirens blaring, save the day, save the day. They're expected to cut rates again at the end of the month in like 9 days. And that's when the real fun could potentially begin, because when the Fed cuts rates, the yield on your safe money market account, that money market money, which is probably looking pretty good right now at over 4%, well, guess what? That starts to drop. We're talking about 100 basis points in the next couple of quarters. So here's the dilemma. When you get dilemma, you make lemonade. And Bank of America's Michael Hartnett, he beautifully laid this out this weekend during the Flow Show reports. You've got cash, but its return is about to evaporate if you're in treasuries. So do you buy government bonds when the U.S. is $38 trillion in debt? Suppose we hit that number over the weekend, 38 trillion. Do you buy, even when the government shut down, we hit 38 trillion in debt. Do you buy corporate bonds when their spending spree are at 20-year lows? Corporate bonds are not, they're not writing bonds and creating, they're not taking on projects to expand. This is kind of the engine, right? There's red flags right here that corporate bonds are not being written. They're kind of their spreads are at 20-year lows, meaning you're not getting paid for much risk. So do you pile into stocks that are trading at nosebleed 40x CAPE ratios? Or do you look at the one thing that's been quietly and not so quietly going vertical? Everybody know what I mean? It's shiny. going vertical. And that brings us to the investment opportunity of this whole mess here. Hartnett calls it the big trade, BIG, bonds, international, and gold. Let's start with bonds. Boring. But with the Fed cutting rates, the economy showing signs of weakness, the 30-year Treasury, it might be attractive to you. Hartnett sees it's heading, probably going below 4%. And if we get to real credit crunch, zero coupon bonds, might be your hedge against the chaos. But those treasuries that pay the 4% now, they're going to be very valuable when we go to zero coupon bonds. Next, international. For the last few years, it's been all about exceptionalism, U.S. exceptionalism, but the party might be moving on. The Hang Seng in Hong Kong is looking to break out. Things ex-U.S. stocks are trading much more reasonable 15x earnings compared to ridiculous levels here in the United States, like 40x. It's like a rotation and rebalancing. The rest of the world might finally wake up and catch up. And finally, gold, right? The shiny metal Hartnett isn't just calling for 5,000 gold. He's calling for 6,000 gold by next spring. Why? Because while everybody is saying gold is a crowded trade, the numbers show that almost nobody actually owns it. Bank of America's high net worth clients have a measly 0.5% allocation. The big institutions, a tiny 2.4% allocation. The speculation is just starting to ramp up. We're seeing rotation from crypto to gold. We've seen record inflows into gold ETFs lately. The price has been hitting new all-time highs almost daily. Gold is the ultimate safe haven until it isn't. So be careful. We can see a large pullback. When gold goes vertical, that's not normal. Look at the past. Every time it goes vertical, what does it do? We get a correction. So, as you watch the market in the coming weeks, don't just watch the flashy dance floor of the stock market. Keep an eye on the cracks of the foundation. The regional banks, there's problems brewing. I've been talking about that. CRE, commercial real estate, there's a problem. It's trillions of dollars of problem in commercial real estate. And the rates being high just exasperates that. But can we cut rates fast enough to zero to fix it all? It's like a game of hot potato. When the crunchy credit finally cracks, well, you want to be holding something real, something that has been a store of value for a while. Possibly some blue chip stocks that maybe haven't gone absolutely parabolic. And hey, if you want to join the 5X leverage party when it gets started, go ahead, by all means. Just make sure that you have a good story to tell when the music stops and your account potentially suffers with it. That's all we got on that today, everybody. That's all we get on that. And AABB, thanks for being a channel member. I do appreciate that. Thank you for joining. Yeah. 5X. Yeah, think about that. Tesla 5X. Tesla drops, 20%. 5X leverage goes to zero. How often do we see Tesla make a 20% move? Of course, 20% up. That's big money right there. So 5X that, 100% higher. All trading involves a substantial risk of loss, and past performance is not necessarily indicative of future results. This presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. And if you trade them, you might lose money. I make predictions. I have no crystal ball. I have a bag of unicorn dust that I sprinkle on the market every chance I get. You can buy this if you want to. Friction Labs. Just Google it. Unicorn dust. Friction Labs. So it's lightweight. Affordable. Maybe it'd do you some good. Got my morning monster. It's grapefruity flavor. Welcome to the show, everybody. Let's figure out how we might actually attack the markets, see what's moving and shaking, and might make us some money today. Tesla coming up on earnings this week. good or bad. I think it's going to be the blowoutest, biggest quarter they've ever had. But the problem, they can't do it again. They're not going to do it again. The tax credit ended that we were kind of hopium running on here. And so when that party ends, well, where do we go from there? I'll talk about that more on Tuesday because that comes out after the close on Wednesday. I'll probably talk about it Tuesday evening and then Wednesday morning. We've got Netflix coming up after the close tomorrow, AGNC, Zion, lots of banks still coming in. We've got Coca-Cola, GE Aerospace, 3M. We've got some Amphenol connectors. That's kind of an interesting one. Now, Earnings Whispers uses a proprietary formula to figure out which ones are the most interesting, most anticipated by traders like us. So this is by no means any kind of comprehensive list because when we pop over here and look at the calendar and we look at earnings and we look at this week, the numbers are pretty staggering with 770, 285 today, 776 tomorrow, 1170, 1700 on Thursday. Whew, Thursday's a stacked day. 845 on Friday. You even get some on Saturday with 214. And then next week, do it all over again. Even bigger because we get some of the big tech like, look at that. Wednesday, Thursday, 3,000 companies, 1,700 Tuesday, 3,800, almost 4,000 companies on Thursday, the 30th. Halloween, 1,700. So it's going to be a big week, big couple weeks. Lots of earnings. Lots and lots, lots and lots. So Tesla did a nice pullback right to the support I would expect. We're climbing. We know it's going to be a banger earnings, but earnings are like a story of what we did and what we're going to do. And we already know that, anybody paying attention already knows that what we're going to do might not be so clear as to what we just did. So big problems might be coming. Will, thank you for being a channel supporter. And see what happens. So didn't necessarily mean to start on Tesla. It just happened to be the one that was up when this one reloaded. SPX, guess what? What I drew Friday, still kind of rolling. This is what we got. This would be I don't know, you want to say it's a diagonal? Is it ABC or is it just a 1, 2, 3, 4, 5? This is what we've kind of got looking at right now. It's a diagonal because 1 and 4 overlap. That's not great. It's what we would call an ED, not erectile dysfunction, but ending diagonal. And that is usually a termination move. You know what happens after that? Off the bottom of the chart. Why would it be an ending diagonal? Because this has been a long way up. There's not really been any pullbacks in this either, so this might be where we're heading. If things get really spicy and we get that blow off top, could be really crazy. Could go all the way up here. That'd be 100 times the pullback we got on Liberation Day. And funny, the Liberation Day pullback started way before Liberation Day. So things could get spicy in the next few months. This is looking like we'll probably go higher into 2026. At least start out going higher. But we could end up doing a large pullback somewhere over in here. First quarter. Now, if this ends up here, if we wrap this up by the beginning of November, we could see a bigger pullback here and then go higher, even bigger into that first quarter and then pay the price even more with another bigger pullback. So this credit party is going to keep going, especially if they do the rate cuts and keep announcing rate cuts. Credit, it's actually, we're having hiccups in the U.S. markets. We're seeing, last week we had a bank use the kind of like, it's not really an emergency lending facility, but it's a lending facility that doesn't get punched very much. But they borrowed $6.5 billion, and then we saw like Western Alliance announcing that they had some problems. But this was already taking a step back because of Tricolor and the auto parts thing that I've been talking about. So that's just a small, like, subprime auto lending is a very small market compared to CRE. If the CRE comes apart, smaller regional banks have a bigger issue cooking. You know, KRE, this is regional banks, Spider's regional bank ETF. Seeing this recover a little bit. Now, the question, can it pop up through? Was this just a pullback on the way higher? Is this just a pullback to the roadmap line and then we shoot on higher, 74, 78? Or was this the sign of something deeper getting going and this be an A, B, and the C comes way down here? I don't have a great way to tell at this moment. Be cautious here. If you're long KRE, that high, that low, watch for this 618 level right here. Right around 63. If we come up to that level, turn down, break back below that, it's game on for probably a trip down here, at least in the 40s. That should probably pull up just a bit. Still down in the 40s. Probably go lower than this low right here. And it can be proportionally bigger. We could get a 1272 extension, which would put it at 40. Right down here. If things got kind of nasty, we could go down, make a lower low. And this whole thing be an A, a B, and a C. That'd be crazy, right? Go lower than COVID on regional banks. The cracks are showing. Just be careful. NQ. Jumping in, looking at where we are. As I kind of outlined, same pattern as S&P. We're probably going higher, at least in the near term. Probably through beginning of November at least. Russell. Man, watch out for that 2600 hit. That's still the target right up here. Nothing changed. My alert's still there. Still looking for that 2600. We're at 2500. That's 100 points higher. So we're still looking for that pop. CL. Hanging out right here. We're so close to making a lower low. Target's right down here, 52.50, maybe even down to 50. That'll be the big target that I've had on here for, what, 3 years? I think I put this down here. I guess I put it in there in 23, so 2 years. We've had that bubble down there as a target. We might finally go hit it. Gold. She's on a rocket ship. Rocket ships don't end well. Doesn't matter what the narrative is. Rocket ships don't end well. Now I can go to ridiculous levels. We could go to 9,000 on this. Like things can get, crazy can be crazy-er. But if we do that, the results are a retest of the breakouts. Almost every time. Almost every time. It's this right here. It's the same thing. Just got to buy NVIDIA. Anybody remember that from a couple years back? Just buy NVIDIA. We're all going to be rich. Well, NVIDIA isn't making these giant upside moves anymore. SMCI. Anybody remember that one? That one could come back. I mean, we're doing the chop right in here. Everybody see it, right? This is a classic stock market pattern. These ridiculously big moves bring more and more people in, and then we teach everybody a lesson. Happens over and over and over and over and over. And over and over and over and over. You'd be like, well, GME hadn't come all the way down yet. Yeah, there's still a lot of hype. Probably coming back eventually. So just be careful chasing the hype. I like to hunt for the opportunities when they're ripe, not when they're hyped. Like NVIDIA here, maybe that was riding with me. I bought it right here. After we made this bottom, after we did this 67% pullback, came up off the lows, did a retrace, I bought there. Made a couple 100% and sold out up here. They're like, well, you missed out on the big move, but I moved on to other things. Like that was a big, strong move very quickly, actually. Look at the time it took to go from right there to right here. That was only a few months. Then if you had held on, you would have still been waiting here as the curve arced down. This is taking a lot longer than that first move. So move on to other things. All right, rolling back up to Bitcoin. So as long as we're still below, it's pretty easy right here. As long as we're still below this level right there, coming down here, under 100,000 still possible. 100,000 is a psychological level. If we get below that, we could see a bigger, faster, nastier flush out. Be pretty wicked. But at the same time, here's this low, here's this high. 618 retrace here. Wouldn't be out of the realm of possibility. And if we did that, look at this ridiculous thing it sets up for a blow off top that kind of fits in line with the rest of the narrative of the market going on even ridiculously higher. We could see prices up at 200. Now, I'm not predicting time-wise. This could go fast and this could go fast, and we'd be all finished up before the end of the year. Just keep an eye on it. Ethereum trying its darndest to hold on to that 618 retrace. If we break out above this downtrend of highs, it's game on. Target's up here at 6,100. Now, if you don't have exposure to Ethereum, you could buy Ethereum, or you could play it with a leverage ticker, because what could possibly go wrong when you use leverage? But you could play it with this one, and there's a variety of other ones. Okay, ETHT. Right there's another one. 2x leverage. Need to break through. It's been a pretty solid downtrend of highs on this leverage ticker. It's like reading the tea leaves. Like we came up, found resistance, and pulled back. If we can get through, that could go even higher. And next up, we have NKD, Global Liquidity Indicator. Going on higher. Here we go. Well, for all intents and purposes, we're basically at 50,000. Promised land up here. Maybe we go up to 60,000. This party's going to get crazy. When this money flows in the rest of everything, these risk-on assets, Bitcoin's lagging right now. Things are going to get wild. Dollar, still showing some, we bounced off the roadmap line here. Imagine that. So if we hold this uptrend of lows, break through the roadmap line, back test it from the top, game on to go higher. If we don't get through, probably going lower low than this low right here, which has been the lowest low on the pattern so far. Down around 95. I've been looking for a bigger move down too, so we could flush this all the way back down to 90, but it just doesn't look very likely at the moment. Apple shooting back up, but not breaking out. If we do actually break out, 276 would be the place to go cruising. I like the way this held right here. It does encourage, gives me a little bit of hope that we might see that pop out to 276. Amazon, though, below the roadmap line, potentially suffering. We can see this down here, lower low, in the 160 area. Google still got the 263 targets. Meta sitting on the roadmap line. Just want to watch. If we break through the 618 line, we could set this up to pop on up to the 840 area. But if we break down, like here's support. If we break down below that support, there's the next level. If we break through that, might be heading down here, lower low. Just keep a watch out. But right now we have 3 waves and we're bouncing. We need to get above that 618, 750 to kick this off for a move higher. Microsoft still being extra soft and probably needs this move. This one was advanced. This pattern was advanced compared to all the others. It was running ahead of everybody, except in, in basically Microsoft and Nvidia kind of doing the same thing. But that was the big correction back here into Liberation Day. This started last summer. Then we shot up 60 whatever percent. Now we're doing a correction off that. That's really, it's kind of the first correction we've done in this whole pop off the lows. So does it hold here, or do we get something a little deeper? We can hold here, sets us up for higher prices. 565 will be the conservative target. But we still have downside to go before I would think that was a high probability. 480 area. Just kind of want to see it come back in that zone. Nvidia, struggling here. Struggling. Everybody's struggling. So if we can pop it, 212. It's been the target for since we set this low in Liberation Day. And we had the 164, we had the 176, and then the 212 above that. We popped right on through the 164, didn't even slow down, did back test it here. Kind of ground that 1272 level. Holding on to that is bullish for getting that final little pop. Remember, that's big money, though. Every dollar this moves is $25 billion into and out of the market. That's big money in the market. Even when we're talking trillions of dollars. Tesla has this. We did this consolidation, this little watermelon seed squeeze thing. We popped out very quickly. We got to the top of it right here. We pulled back, kind of consolidated a little bit. Now, very commonly, we see us do a double pop, where if we're gonna be really bullish, that was the pop. We got to rest a little bit, and then we pop that size again, and that would put us right up here, around 570 to 600. which is right in the middle of the target. And if you want to see an example of something that did that, here you go. Costco from back here in 22 did that watermelon seed squeeze, broke out the mouth of that right there is that right there. Bring it over, we hit it, did a pullback, just like Tesla's doing right now. And then we went on to find the ultimate resistance here. And Costco hasn't been able to break above that yet. So this is a common pattern we see. If it's going to get continuation higher, we move at size again. We do one of those, take a little rest, and then we do another one. So if we get up to that level on Tesla, 570 could be met with some resistance. Yeah, this over here, 550 makes sense. 611 makes sense too. Puts us right in that zone. Does it have to do it? No, we can take a trip back to the roadmap line. Netflix has bounced off the roadmap line, and it did a 618 retrace of that bounce. So we bounced off the roadmap line, got a retrace, 618. Here's the near-term target, which would be a breakout. Then we may retrace, retest the breakout of the downtrend low or highs, turn lows, and then go for the extension. The extension would be run that high, run that low, 1375. Significant resistance here. That may be where we may hit that, pull back, and then shoot through. Right there. All right, I go pull gainers, put them on the list. I go pull decliners, put those on the list too. There were a lot of gainers today, and I brought a few setups, and there's a bunch of those too. So all sorts of stuff cooking today. Wow. That's Bitcoin. PPLT. I was like, whoa, something big, but that's let's see, what would that be? I don't even know what it would have pulled up. BTC. The tool I have does not go pull crypto. It only pulls stocks. So I'm not sure what BTC would have been on the list. Interesting. And we've seen some interesting stuff happening in the market here today. Decliners, app loving. Had a feeling we're going to see this come back to the roadmap line. Decliners usually have the better opportunities, so let's look at a few of these. Remember, these are declining in a strong market here, so thumbs up, be careful. Prax, well, that popped giant and probably going to come back to reality as a dumpster fire pattern. VHC. And no nothing there. A-Lab. Ooh, look how close that is. Set your alert right there. We're in the vicinity. If we tag it, that could be a bounce to a new high at 294. Tons of stuff firing off today. Tons and tons and tons. Still hear him going too. Cold. Sitting on the roadmap line. Natural gas. Let's see what we got. Pop a little bit. So this is a three-wave up at this point. First move down, retrace. If we hold that 618, turn down. Below that right there. That's a Elliott wave reversal pattern, but it's also head and shoulders pattern. From the head to the neck. Off at the bottom. We can see this down here. 235. So we tag that target, and then I have a bigger target down here at 2. Then we might get, that would be 1, 2, 3, 4, and we can see that push on down into the top of that target zone. So playing UNG with these things, it's just difficult to play these. This is an ultra short, so this one's dropping while natural gas is popping, but when natural gas pops, this will go up. But it does have a high burn rate, if you will, because natural gas doesn't trend over time, so coal just gets eaten up trying to keep the leverage short going on. So be careful. But Wiser. This is interesting. This showed up on the daily setup. Got this high back here. We've got this low down here. And here was the potential entry. We're still struggling to get through the roadmap line, though. So you have to take your pick. Do you want to get involved or not? The target is just right up here at 64.85. The history of this target, ticker, history of this ticker and this pattern, 1656, 1.1, not great. CPRI, that was in it from a few days back. We bounced again, didn't stop it out. 22 on this one and almost 23 on that one. DuPont, look at that. The numbers here are pretty good. I mean, it's just a normal standard. Look at that, 57, 75, 1 point, basically profit factor, make $1, lose $1. But 75% of the time, it work out, especially when it's trending. This looks pretty good right now. There's the high, here's the low. There's the entry. Target's right up here at 83.30. DFGR. Here's the high, here's the low. Potential right there. And 28 target. FELE. And there's a bunch of these nice looking ones. Here's the high, here's the low, there's the entry, 101.30. Look at that. Oh, this is a really good one. Look at this, 31. Check. 87. Check plus. Profit factor 2. Check plus. That's all the stuff I like to look at. So here's a FELE. This is Franklin Electric. Set to go higher, 101.30. If you're playing options, you need at least 210 days, 7 months of time. Just be careful. You could come in here with a credit spread if they, I don't even know if it has options. Yeah, they do have options. Not very, you can't even get 210 days. So this would be a shares type trade. But I want to trade options. But you should trade something different then. Don't force. Just because something has a price pattern doesn't mean you have to take advantage of it. 2015. 6, doesn't matter, doesn't matter, doesn't matter. 30 is the number over here we're looking for these to matter. Otherwise, 75% of the time, the target is this. And 1.2 is the profit factor. Across tens of thousands of trades, just to reiterate. I don't even think I have that up at the moment. Yeah. Oh, yeah, I do. Right here it is. Right here it is. See, I've got tens of thousands of trades in this thing. Generally, on average, there's 4 of these setups per day. Some days, like today, we get like 16. Some days we get 0. They last 75 days on average. All right, 45 days on average, excuse me. 75% profitable. 74.7. And there you go. Standard deviation on that is 35 days. So 3 standard deviations. 210 calendar days. 150 calendar candle days. So if you're looking for this one, 75% odds we're going up here. 2015. IBN. Despite that pulling back, that still has the target. But the target is only 33.31 right there. Careful on that one. Does win 95% of the time, but it's not a statistical population. But even if it lost the next 11 trades, this is probably still going to hang out above 75. So this one does tend to trend. IBN. But the target is not very high. But you could get in down here where we are. Your risk to reward, risk, stop out dollar below the low, reward, still pretty nice. IYR, iShares Real Estate ETF. I don't know. This has been pretty flat. I'm not sure I want to get involved in this. The algorithm's been in this trade from back here. Did another bounce. Sets the target at 99.35. In. So it did a bounce back here. Fired off the entry. Went down lower. Didn't stop it out because it didn't get a dollar below the low. Fired off another potential entry here. And this is another potential sub entry right here. 44 or 43.66 target. That would potentially work out inside this bigger. This one's actually going for the 44.68 target right there. REIT. Now, in. Look at that, 40. So this is warning you, though, these statistics here. 42 trades. That's significant right there. Lower than average. That's warning you that this ticker tends to fail a little more often than the average. And the profit factor is negative. REIT. There's that high, there's that low, there's the entry, 10 trades, 90. That's pretty smoking. Doesn't mean anything, but it's pretty smoking. And 26 on the upside. RWO. See, that could be the fallacy right there. You see those numbers, you're like, ooh, man, no, that's one I want to get involved in. But then you look at this number right here, and it's below 30, and these mean nothing. Like 20 trades can completely flip this around to, only winning like 50% of the time. And the profit factor just evaporate. So if it can keep on this and get 20 more trades, awesome. But if it can't, it can just start sucking. So just keep it in mind. But with 10 trades, it's 75% likely to get 26. It doesn't mean it's any less likely to work. Just be careful betting bigger because these numbers are good. Standard size risk. RWO. Here's the bounce. And 46.79 targets. Yeah, these just statistics don't mean much on that one. I'm hunting through like 4,000 tickers every day looking for these. There's the potential entry, 76.22. And that was a kind of a coin flip. Toyota Motors. High, there's the low, there's the entry, 205, 35.71. That's just a normal, a little bit less on the profitable, but profit factor makes up for it a little bit. It's just a nice standard win rate here. 205.50 be the number. UL. That's a nice looking bounce. That's just very clear. Nice upward momentum. This looks like it might, look at the numbers down here too. 40. Chow. 87. Chow. Plus. 1.5. Better than normal. This one tends to trend. 66.15 be the target. Could it take a while? Yeah, absolutely. VNT. Oh, that's another really nice looking one. Couple nice ones in here. This one's statistics don't mean jack diddly. Fall back on the standard. 75. 44.75. So all we're looking for with these numbers down here is, does this ticker tell me if it trends or doesn't trend? It's like UL says, hey, this ticker tends to do this pattern and tends to work out when it does. But some of the other ones, they have a lower win rate, but that's still a statistical significance. Say, hey, these don't tend to work out as well. So be careful when you're chasing after them. It's like DD here. Profit factor tends to suffer a little bit, even though it tends to trend about normal. Tends to be in line with the historical average, around 75. This profit factor tends to come in late, low. So these 25 losers tend to be bigger and eat up all your profits on the 75 winners. So when it's trending, it tends to make small incremental moves higher. And when it fails, it tends to blow down, is what that says. Just blow out. Alrighty. Let's do a spot check on a few more here. Oklo, be careful. And come back to the roadmap line. I got put. Let's talk about this. Trump announced he's going to price control Ozempic. I have no idea how that's going to work. Took a dive toward the roadmap line. Already saw this setup back here. I was already getting excited. I sold puts on Hims at 17. Got put those shares at 17. Actually, at 16.40 is my cost because I got paid 60 cents for a week to sell those puts. And I can go out to November. Look at this ridiculous. Look at this ridiculousness. Let's close this and close that. Where's the options here? Yes, I can fly out to November, just 1 month away. I can sell that 37 for over $1. Are you kidding me right now? That's $20 upside from where I got put. $20 upside per share. Plus, I get another $1.50-ish. Another $1.30. Plus the 60 cents. I mean, we're looking at, gosh, almost $22. It's $21.90. If that thing just popped up back to where it has been. But 37 is not even that crazy. It's just right there. That's not even that crazy a move. Wild. The premium available here is just ridiculous. And one of you might be like, well, what if you go out further? Well, look, the IV term structure, the further you go out in time, the lower the IV. That's just weird. So playing close as you can play is where the best implied volatility is in these options. And since they're not weekly, they only have monthlies. This is kind of a little bit skewed, but there you go. It's using those options that just expired, basically. So you'd be like, well, Trump's going to destroy this market. Well, this chart has a very bullish pattern. So if we can maintain that higher low, still looking for that upside. And for those of you that's still with me, check this out. That AWS is affecting the K-info, I guess. 28.35 right there. There's that 660 cents a contract I took in right there on Hims. Booked it out, bought those shares, 17 bucks. 28.35 year to date. Look at that, almost $29,000 this year. Pretty good. All right. See you tomorrow. Same bat time, same bat channel. Thanks, Will. Have a great day. See you later. Bye.